I don't DRS anything, but don't you think something must happen or change once a stock reaches 100% DRS, even if just new rules applied? No, I also think that'll never happen, so it's a pointless thing to talk about. I think long before 100% DRS is ever realized, GME would dilute shares in some form or another, either via bonds or actual just at the money offerings. GME as a corporation is working, should be working against that very goal, right? They desire liquidity in their stock versus illiquidity. There was a guy about 100% of a stock, yet it was still trading and nothing was done. Yeah, I mean there was other issues with that, but basically, no one gives a shit, frankly. There's always liquidity. The market's designed to consistently provide liquidity, even in the absence of liquidity. Right? Every stock is owned 100%. But they would want to do that at a higher price target, which could be reached by illiquidity. No? Sure. Providing something's driving the price. What's that's then you lack catalyst, right? DDS been out there for years just ripping, yeah. And then also falling really rapidly, right? And don't forget the downside aspect of DDS. RC wants vol shorts to fuck off, and DRS is a bit counterproductive by reducing liquidity, giving further reason for dilution. Yes. I mean, they've diluted and they've split the stock, all in an effort to create more liquidity and reduce the volatility of their stock. Right, the volatility of their stock makes the stock an unattractive investment. Yeah, there's issues with the fast system too. Given the call stranded above 40.25, you think there's a decent chance we go back up to those levels in the next few days. We'll see if they start to sell off. So far, they haven't. So someone's still fairly confident that those levels will be seen at some point. That doesn't mean they're right, and they could have hedged, right? So it's not a guarantee. We just know that there's positioning there. My question is, what happens if 100% is reached and then people sell when nothing happens? I mean, if those shares, those shares aren't lent, right? Because they're in DRS, so the price of the stock would just go down. Was it sufficiently clear that indication from Ryan Cohen to DRS in several ways with plausible deniability? No. I mean, I think he was pretty explicit in saying that his tweets really didn't mean anything. Do you know what observational bias is? I mean, even if Ryan Cohen thought DRS was the way, which I highly doubt, it in no way benefits him, right? But even if he did think that, he can be wrong. He's not some, like financial genius. He's a guy who started a pet food company. I mean, you're acting like because he's a. This is the assumption that's being made here. That's probably a bad assumption to make, right? Is that because he is a billionaire, he must be very knowledgeable in obscure market mechanics, right? Those don't translate. I would say the number of experts on the DTCC systems and share ownership through transfer agents is probably less than like 15 people in the entire world. The only one even talking about it hasn't been in the industry for well over a decade. And then everyone else is probably still employed in the industry and are keeping their mouths shut. It doesn't matter if he could directly recommend it or not, right? You're taking so many leaps in logic to reach the Cohen told me to do it. It's been a while since you murdered DRS shills. I miss this. The point has never been to murder them. It's been to educate them, right? That's all I ever did this for, was to teach people how all of this works, right? Because they were running around with their heads up their own asses, basically just misinforming each other all over the place, right? So it's never been in an. I'm not a nice person, generally speaking, and I know I can sound pretty condescending, but it's always been with the purpose to teach people more, not to embarrass them or belittle them. You're talking about add a bit, right? Well, not just add a bit, right? And the vast majority of DD on Superstock is false, or about things that do not pertain to the stock market as it exists today at all, or a misinterpretation of how things work in the real world, right? And so once you've eliminated all of those DDs, there's very little left. And what was left, all of those people were forcibly ejected from the subreddit. What will be your price prediction for GME by the end of the week? I don't know what GME is going to end up at the end of this week. It's probably just going to trade with the market. It's going to have a little more sensitivity to index moves because of the ETF FTDs. So anywhere between 19 and 17. If the market goes down into the end of the week, I don't think 17 is out of the question at all. If it goes up into the end of the week, we might see 19 again. It's illiquid and at the mercy of the indexes. So do with that what you will. The buying pressure on it day to day from ETF FTDs is minimal. Ken Griffin just told JPOW to stop talking. LOL. Article on Yahoo Finance. Yeah, it's really hard to keep the VIX under 20 when JPOW keeps opening his mouth, right? Do you know the expiration of the call position trapped at around 4030? Still a chance they go back up to get those. They're a little further dated, so that's the reason I think there's a chance they push for it. Although right now, the negative hedge on the market's pretty strong. They'd need something probably to push up through all of the negative gamma to even get in that range, or that negative gamma would need to start approaching expiry. And it looks like a lot of it is for, like, it has just come in recently for 317 and is also for like 331 and 421. Especially the other day during the pump when puts got really cheap and VIX dropped. We got a lot of long dated put positioning that came in there. So the downside's pretty strong. It's definitely not an easy fight. They take advantage of, low liquidity moments to drive prices up, or low volume periods to drive prices up and get VIX down, but it's not affecting any consistent price improvement, right? I think you finally eliminated all the GME and AMC MOAS YouTubers. I believe sanity has set in. It hasn't. I would still say the vast majority of GME and AMC investors are woefully uninformed. So even if they're sad because their stock price is down, they still don't know what the is going on. Has AMD's pump been done using calls, or has it been actual buys of institutions moving away from Nvidia based on earnings? It's mostly just the sector has received a lot of investment capital, probably through ETFs. People are very interested by the idea of AI and are thus investing in fairly broad ETFs that target AI and fintech and stuff like that. I think there's like bots, and then there's another AI one too. I can't remember the name of it, but there's a bunch of big like ETFs. There's also the chip sector ETFs, which have gotten a lot of interest recently. And when people buy into those, they go and buy the stock, right? Don't forget index exposure on NASDAQ, which really hasn't gotten hammered that hard yet. Do you think if we get an actual OPEX in March, the market will rally, helping the momentum? Same as last year. It seems now like it's impossible for GME to actually go up without a market rally. If so, you think it would reach another high like 40-50? Yeah, it could. It may not, which would just mean that obligations on GME could be cleared on, less potential price action. The correlation over the last, year and a quarter between GME and market rallies is largely driven by the fact that short volatility positions are just capitulating on both simultaneously, right? That they're aligned. Whereas in the bull market, VIX would go up when GME ran, right? Because it was moving against the market trend. Remember GME's negative beta and everyone going on about that, right? So when short vol positions were closing in the bull market, it caused drops in price, and in the bear market, it causes increases in price. GME is not special. It's it's a vol short position, and retail buys it, but it's not. Other than that, there's really nothing particular that separates it from anything else that volatility is shorted on. And since there are bigger things that volatility is shorted on, like the market itself, the coinciding effects of those can be large. Take out the 300 plus days of 100% utilization. The thing that Ortex measures is bullshit. It counts the numbers of shares in and out of retail brokerage accounts and estimates an amount of utilization based on that. Those shares can be returned and borrowed again and returned and borrowed again before any figure is ever reported to Ortex. So it means literally nothing. It's a useless data point. I mean, we can already map out GME's actual liquidity. Why the fuck would we look at, Ortex's partial visualization of the lending pool on GME? I think if we get an OPEX like last year, it would be short-lived and covered under the guise of the market rallying into the Fed meeting or the Fed rate decision. And then if we do get that rally going into the Fed rate decision, I would expect that we would see significant shorting afterwards, regardless of the rate decision. Because if we get that rally into the Fed rate decision and GME runs up and Upstart runs up and everyone's happy, that means that short vol in the market has closed out, which means VIX go up. Gherk, give me some sweet hopium. GME hits 17 next week. I averaged down to 25 a share. March OPEX lets me yeet these bags through RC's window. Tell me it's true. It could happen. GME is quite illiquid right now. It's approaching the underlying itself is approaching illiquidity levels higher than last March, I believe. It's getting very close. I don't know how it looks today. I haven't looked since this morning, but yeah, very, very close. And this time, no ETF sell-off. So, in December, early December, we hit very, very illiquid levels on GME, and then unfortunately had a large number of shares sold off by ETFs. It was like 2 point something million, which restored liquidity. And then, obviously that liquidity was used to short through most of December. Then we had some, legitimate covering through the January deferral period. That liquidity now long gone, and GME almost back at the levels it was at in December. So GME is actually getting truly illiquid again. There's been a little bit of covering on XRT. Obviously, we're approaching the ETF FTD period, so we expect some ETF liquidity to be restored. If that liquidity is then used to short GME very, very hard through the SLD period, that would increase confidence in an OPEX. Right now, put interest on XRT is quite high for the March 17th expiration, so that's also compelling. And confirms, what we're seeing here in the data. Generally, during this period, we should see put interest fall a little bit as a little bit of XRT liquidity is restored. That liquidity should then be used to short the basket, and then the basket would be covered going into the quarterly settlement. So there's a chance. It's risky though, Benjamin. Of course, OPEXs are always risky. If the market doesn't rally, that could pull back on potential price action. GME is still very light on the call interest department. When VIX suppression stop, when they're ready for it to, or if an overnight move is sufficiently large enough to put them in a position where they can no longer keep it stabilized. Who's they? Volatility shorts? Anybody with it can be volatility shorts. It can be anybody with a motivation to prop up prices while they are selling equities, which is a large number of market participants right now. Yeah, large institutional banks and hedge funds. And also very specifically volatility shorts. It is in the interest of volatility shorts to keep volatility low because they're short volatility. But what that does is it increases tail risk, right? The longer and longer you short volatility, the more unstable the risk becomes. And eventually that risk has to either be, you have to lower the risk or it collapses. So if you short volatility too much, then it'll collapse. And so you have to move everything in cycles in order to keep it stabilized. James Rowland bought so many 421 GME 20Cs. Proof or ban. Who cares? What, right? He just copies people's shit. Who gives a fuck? What happens to Jimmy if it stays illiquid? What do you mean? Liquidity's mean reverting, so be more specific. You think this uptrend continues into the end of the day? I mean, it's already weakening. Probably not. I guess if we get like a big block of like put capitulation, maybe. VIX is pretty low now. I don't think they care about the price dropping too much. So no stock price is based on its actual value. It's whatever the market makers decide it's going to be. I mean, it's based on both, right? The market makers can't really effectively control price and make money doing their jobs, right? Like they can do a little bit of either one. It's kind of like you have three options, you can only pick two. If there's strong interest in a stock, they're not going to be able to stop that, as evidenced by GME, right? GME is the perfect example of market makers not having absolute control over the price of an asset. Should I DRS my NVIDIA? I don't care. Just make it up so we can clip it. Shower thought for the day. Don't think of it as inflation. Think of it as price discovery. Problem solved. You're welcome, Chair Powell. That would just confuse people. They already don't know what his job is. Shorts never closed. Don't say stupid things, Ben. The shorts at $5 closed. The shorts at 400 definitely didn't. Shorts never cared. That's more accurate. Did futures enter the demand zone? I don't think so. This looks like I said, this looks like it's failing. There's still clearly a basket of stocks, right? Not really. There's just illiquid stocks where it's more visually apparent that they are manipulated through volatility shorting, and then there's everything that's just being volatility shorted. It's you start trying to define the basket and it becomes broader and broader and broader, right? Apple, Tesla, NVIDIA, these are all massive volatility shorts, but its apparentness is clouded by the fact that they are they're highly liquid markets, right? And you look at very illiquid markets like GME, Bobby, Macy's, Nordstrom's, where the effective liquidity is drawn on heavily by like XRT, for instance. And in those markets, the ability to visualize the cycles and volatility are much more apparent. I just told you why. They're intrinsically linked through ETFs, which are the pools of liquidity that are used to synthetically short these stocks. So you think on Jan 21, all the stocks that went up is just because of liquidity? Yes. I wrote a DD about it. You can go read it. It's not really liquidity, it was more the lack thereof. What about most of them being retail businesses? They're not. That's the point I just made to you. Is that those businesses, those small, mid and small cap companies are highly illiquid, highly volatile, right? And the appearance of the cycles is more obvious there. But Tesla, NVIDIA, Apple, those are all volatility shorted as well. They all have similar cycles to GameStop, but they're also massively liquid markets. So the obviousness of those cycles is less. I mean, you want to see the biggest market that volatility cycles are apparent on? Look at the SPX. Literally OPEXing, right? Like it's doing the same on a much, much bigger scale.